Hi, I'm Working Dad Trader, and in this video today I wanted to look at Ray Dalio's Bridgewater Associates company and his latest 13F filing, where we look at what he's been doing, what he's been buying and selling, and what he holds in his portfolio. I'm a big fan of Ray Dalio. I think that he's got some fantastic advice and he's done some great books out there, and just the way he thinks, especially in macro terms. He's really quite a big sort of influence and a person, and I think he's got a lot of great ideas, and he's obviously talked about how to protect your portfolio against inflation, etc. So I thought it'd be really interesting to look at his latest 13F filing and just see what he's been doing. Obviously, with these filings, they are 45 days behind time. So this is the one for quarter four of 2021. So we still wait the quarter one of 2022. But I just thought it'd be a really good way of looking into Ray Dalio's and the company's mind to see what they've been doing. Okay. So before we delve into Bridgewater Associates' latest 13F holdings declaration, let's first, obviously, what is a 13F holding? So a 13F or a SEC form must be filled quarterly by investment management with at least $100 million in assets under management. So they have to file these every quarter to provide transparency to investors and to stop things like fraud and stuff like that. They have to do this every quarter, usually after 45 days. So it's not, like I say, really time accurate. So it's normally once these forms are released, you can see what these massive money management investment firms are holding and what decisions they've made. They're normally at least 45 days, maybe a little bit more sort of out of date. They do that obviously because they don't want to give competitors exactly what they're up to within that time. So it's, like I say, it's 45 days sort of down the line of what happened 45 days ago, but it just gives a really good insight into, I think, like people like Ray Dalio and his thinking and his team's thinking of what they were thinking and why they've made certain moves in the markets. So I think it's a really good way of looking into what they're doing. So when we look at the top holdings within the Bridgewater Associate portfolio, obviously at the top is the SPY, which is the equivalent of the SP 500, coming in at, it has a 5.2% portfolio into the SP 500. And then we go down and we look at Procter & Gamble, it's 4.93% of his holding. We've got the VWO, which is the Vanguard Emerging Markets, which is still holding 4.83% of his portfolio. The next one then is PEP, which is PepsiCo. That is 3.08% of his portfolio. And J&J, which is Johnson & Johnson, is holding 3.08%. Okay, so the next picture shows a brief sort of view of what's been happening in his portfolio on this heat map. Obviously the green is stuff that he's been buying, and the red and more redder it is stuff he's been selling. So just gives you a brief idea of what's been happening over the last quarter. Then we go on to what he's been selling, which is really quite interesting. Nearly all of them are almost the same thing. If we go down through, here's what he's been selling in the last quarter. iShares Emerging Index, he's reduced his position by 56% on that one. iShares Core Emerging Markets, again, he's reduced that by 40%. The Vanguard Emerging Markets, he's reduced his position by 28%. And then with the S&P 500, the SPY, he's reduced his position by only about 4.3%. So the main take from this is that he's had three different parts in the ETFs on emerging markets, and he's made a massive cut in quarter four on all of those positions, which is really, really quite interesting. Obviously, with the emerging markets, we've got lots of stuff from lots of countries like China, Taiwan, etc. Other countries like Brazil, India, those type of places where there's lots of companies within these different ETF iShares. So it's really interesting that he's really cut his positions in those ETFs. Then when we move on to what he's been buying in the last quarter, now this I think is really quite interesting. He's been buying Alibaba, where he'd increased his position by 30% in Alibaba, which is quite eye-opening, I think. Procter and Gamble, which he's increased his position by 10.7%. PepsiCo, he's increased his position to 14%. Increased his position from last quarter by 14%. J&J, which is Johnson & Johnson, again he's increased his position by another 12.5% in that company. And McDonald's, he's increased his position another 15% in that quarter on those positions. So what can we look into when we look into what has been going on? Obviously, quarter four, of the December one, of what he's been doing there and how he's been looking into the future and seeing how he wants to position the portfolio. It's really quite interesting that he's ditched all a big position of emerging market stocks, but he's gone in heavy on Alibaba, which again, with Alibaba would have been in those emerging market ETFs. So it's really quite interesting why he's done that. So he's cut his positions in the ETFs and gone big just on one company. So whether he's just trying to dilute it being so diversified in emerging markets, and he wants to put his money into just a lot of it into one big stock, which is getting behind Alibaba. I mean, when you look at Alibaba, it seems to be falling every single week. You look at it now, it's really, really low. So it's interesting, really, even obviously after, because obviously now we're way ahead of what he did then. So even after he bought all those big positions, Alibaba's still way down. So he's believing it's really quite cheap for a really good company, and he sees the Chinese market turning at some point. Well, who knows? Obviously, we don't know what he's done in quarter one yet. When that comes out, he quite well have sold his Alibaba position. We don't know. But it's really quite interesting why he's done that. Obviously, he sees some good things for Alibaba, and for years so have I, but it's just the stock price has never sort of responded in the same way. So we'll see what happens there. The other thing I find quite interesting is that he's increased his position in lots of solid brand name companies, US brand name companies like Procter and Gamble, PepsiCo, Johnson & Johnson, McDonald's, 4 really strong brand name and sort of American worldwide brands. He's really increased his position on those companies, which I think is really interesting, where at the same time reducing his position a little bit in the S&P 500. So again, whether he wants to be, or his companies wants to be more precise on these companies. And with, obviously back then, there was massive inflation was kicking in, especially in the US, where it's going up. So his move is probably to go with companies that will be safe bets against inflation. I mean, Procter and Gamble, PepsiCo, Johnson & Johnson, McDonald's. These are a lot of brands, even with inflation going up, they can pass the prices on to consumers. As with inflation, their costs are going up, so they can easily pass the costs on because people still need these products, especially things like Procter and Gamble, that do lots of toiletries, etc., Johnson & Johnson, these type of things. People will always need these products, even if the price is going up. They're still going to have to buy them. And the other possible thing was they're all quite good dividend payers as well. So maybe all of these factors have come into how he's trying to hedge the portfolio against inflation by investing in these real strong brand names. So it's really interesting move, I believe. Obviously, give me your thoughts on this, but it'd be interesting to see what happens after quarter one. We won't know that for a while yet. But I just find that really quite interesting, the way his team or in his mind works on how they're planning to put their money and their investors' money, which is a lot of money. I mean, they have over 17 billion invested in their company, and how they're moving their money around to safeguard against the things that have been coming up, which was back then in December, which then the priority was inflation. So yeah, it's really quite interesting. Okay, so I hope you got something really beneficial out of that. It's always really interesting to get an insight into some of what the big players in the investing market are doing, the big companies. I always enjoy looking at seeing what they're doing. I know it's slightly out of date, but it's always good to learn from what these big companies are doing. If you love this video, then please help my channel grow by subscribing and hitting the like button. And I hope to see you very soon. Okay, take care.